All right, gang. So in this course, we're going to cover the squeeze. I want to teach you guys about the power of the squeeze itself. Now, the squeeze was an indicator that was created by my mentor. His team put it together for him. And very, very powerful indicator. This is the bread and butter indicator right here. A lot of people don't even understand how to use it, but this thing works magic. I love it. So let's get into it. So in order for me to teach you about the squeeze, I first had to introduce you to the Bollinger Bands, okay? And basically, what the squeeze indicator is going to do for us, though, it's going to highlight to us moments in the market where the markets are consolidating and quiet and getting ready to, and it's piling up energy. So it's a lot of energy that's getting pent up real tight, and then it explodes. Okay. Once that energy explodes, it launches the price to a direction, either up or down. So the squeeze basically lets us know that, hey, this is a period that we can get in that maybe other people don't see. We know that it's going to move. The difficult thing about it is trying to figure out which direction it's going to move. That we don't know. That's a little more abstract. But when we see the squeeze, we know that there's going to be some movement, a strong, powerful move. And that, is really interesting, because this is how you get your jackpot plays. When those squeeze pop-offs, when the squeeze fire, we call it fire, you get a big move in this thing here. So let me actually show you guys here. What I'm going to do is let's actually go and try to clean up the chart just a tad bit. I'm going to bring this down some. And we're going to bring this, let's see, we're going to go to studies. We're going to go hit the edit studies. And let's turn off the moving averages so that you guys can see this here. So I'm just going to hit show study to mute those so you can't see them. And I'll try to leave the Fibonacci's on here for now, but if they're too distracting, then I may have to take them off. But right now, we're going to leave it on. So what we want to do is go into our edit studies, and we're going to type in Bollinger Bands. And we're going to click that, as selected, and then hit apply. And you can see there's some squiggly lines all to the side. They're different colors. We want to customize it a little bit so that you can see it better. So what I'm going to do is let's just go into it. And we're going to go to the lower band. And let's make this lower band here. I'm just going to make this, I'm going to go with this gold looking color here. Doesn't matter. Just the key here is just we want to make sure that we have, consistent colors. The width, we're going to make that 2. And then the upper band, I'm going to also make this the same color. I want that color to match the other color for the lower band. So we want the lower band and the upper band to match each other. Okay. And then what you're looking at up here is telling you how the indicator works. Okay. It's a length right here. It says 20. Well, this is tracking the 20 moving average. So this is the line that's going to be in the middle. And then the -2 and +2 is the standard deviation. So this is a two standard deviation. And if you remember in the standard deviation courses, basically it's going to track that into these bands. That's going to give us, a boundary, kind of like we talked about football and basketball courts. They have an outer bounds on one side and the other side. So this is what this is going to do for us. So I'm going to hit OK here, and then I'm going to hit apply. And then you guys can see that, okay, I got those bounds right there. Okay, cool. And then also what I want to do is the 20 moving average is in there. I'm going to just leave that there for now. You can remove it if you like. I'm going to just leave it in there for now. The second thing that we want to do is load in the Keltner channels. We're going to load in the Keltner channels. And if you notice the Bollinger Bands and the Keltner channels, all of these are on a price studies on the chart. They're not in the lower band like the RSI. They're going to be over the price itself. I explained to you, why we use a squeeze. You'll see why the squeeze is just, better. So with the Keltner channels, you go in. In fact, let me just load it first so you can see. Hit hit apply. And then you see you got all these different colored lines in there. And we want to make that consistent. So we're going to go into the Keltner channel. And again, it's tracking a moving average in there. and which is the 20. And then it's the factor is the 1.5. It's the average true range. That's average price of the stock itself, and it's forming bands pretty similar to the Bollinger Band, but it's more narrow. And we're gonna go to the upper band, and let's just go with we'll go with a red color here, and hit the lower band red color also. And I'm gonna leave these at 1. I'm a little thinner than the Bollinger Band. And then just hit OK, hit apply, and there you have that. Hit OK. All right. So the green line in the middle is the moving average that is tracking. So if I left the moving averages on here, you'll see that this will overlap over that perfectly. But that's not what's important about this indicator. So because it's not important, I'm going to go back in and I'm going to actually get rid of those. And then we'll get into some better explanations here. So the average line, show plot, we want to remove it. And then the Bollinger Bands, we'll do the same thing. We want to remove that middle line. Bingo. Okay. So we got that removed. And then also what I'm going to do is I'm going to just remove, I'm going to clear this whole chart here. Let's see. All right. Because there's a lot of squiggly lines on here. So it could be a little confusing looking at it. So basically, this is the Bollinger Band, the gold, and then the red here is going to be the Keltner channels. And what we want to track, how we use this indicator, is that it's important for us whenever the Bollinger Bands, which is the gold line, moves with inside the Keltner channels. When it gets inside there, when it squeezes, that's why we call it the squeeze. When it squeezes in there, that's letting us know that energy is compressing and it's getting ready to make a bigger move. Okay, so when it gets in there, it compresses and then it pops, it fires. Okay, it squeezes in and it fires, in either direction. Okay, so the next thing I want to go over is the edit studies. We're going to go to, let's load in the momentum oscillator. Well, let's go and scroll down. Here we go, momentum. We hit momentum, hit add selected, and it's going to track here for us. It's going to hit apply. I'm going to just leave that where it's at. Okay. All right, so with the momentum oscillator down in here, it has a center line. Whenever the price is above that center line, then that's indicating a positive trend, a bullish trend. Whenever the oscillator is moving under the zero line, then that's giving us indication of a bearish movement here. So this is the momentum itself. And so when you use this in combination of the Bollinger Bands, you get a sense of direction of which direction the squeeze is going to fire off. Okay, when it gets into, squeeze here, if I take a look at the momentum, that's up, so my direction is going to be up. So this means that I'm going to make a bullish trade with my indicators telling me that this thing should fire off long, and that's what happens. Okay, same thing here. Once this thing goes down, it fires short. Okay, so what I'm showing you guys right now, these are the internals for what makes the squeeze. It's basically the Bollinger, the Keltner, and the momentum here. So what I'm going to do now is going to load the squeeze in here. TTM squeeze. Hit that right there. Add select. Hit apply. All right. So there's no customization needed on this indicator. It is what it is. All right. So let's actually show you what's going on in here. Expand this. All right. So you remember how we talked about the Bollinger Bands squeezing inside the Keltner channels. It's letting us know that the markets is getting ready to explode into a direction. We don't know which way, but we do know that it's going to explode in some form of fashion. Okay. If you take a look at my squeeze indicator, the red dots is the squeeze. It is letting you know that there is a squeeze on this particular stock. Because we know that it's a squeeze, this gives us an edge as traders because it allows us to sneak in, to get in before the move take off. So that's the thing about trading. You got to be able to get in before the move take off. And the squeeze, that is what it helps us to do. So we can get into the position before it takes off. And as you see, the price explodes and fires long. There was another squeeze here. It did the same thing. So we can take a look at this squeeze here. Okay. Keltner, Bollinger Bands inside the Keltner channels. That's the squeeze. Fire long. Okay. And then we had a squeeze back here. Squeeze right up in here. And once it fired short, you can see that it fired short. And then we had a small little squeeze here. It was like a 2-period squeeze right here. And that one fired long as well. Okay. So the squeeze here, they normally last on average, about 6 dots on a daily chart, or pretty much any chart. If it's daily, you can use it on a daily, you can use it on an intraday, or a monthly, or weekly. It normally lasts, on average for about 6 to 8 periods before they fire off into a direction. Okay, so it could be shorter, it could be longer, but on average, it lasts about 6 squeezes. So once you get to about 4 squeezes, when you get to 1 squeeze, that's not, enough conviction for me to get in right then. I like to wait till they get to about 6 squeezes if I can, right? Somewhere between like 6 squeezes, you can get about 6 squeezes in there that you're ready to go. So I try to get, somewhere between 4 to 6 squeezes, or I try to get in that. Okay. So once I see those dots in there, I know that this thing is getting ready to move. And so we let it, chop up a little bit, let the energy build up around 4 to 5 squeezes. I'm in. My capital has been deployed, and then we're going to ride the wave. So it's all about you getting in and riding the wave. Okay. So let me actually go more into the squeeze itself, where you guys can see the squeeze is the red dots here. And let me stretch it out a little bit here so you can see it a little. Okay, here we go. If you notice where the red dots are, those are squeezes. Okay, these are all squeezes. The green dot that follows the red dot is letting you know that the move is taking off. This is the fire. And so we say, we're in there, we're ready, and then we're firing, blast off, like loading up the cannon. So this is where we're loading the cannon up right here in the red dots, and then we're blasting the cannon off to get the green dots. Okay, and the squeeze fires long for a powerful move up. And these columns here, these bar columns that you see, they're blue. Okay, there's a light blue and then there's a dark blue. These are basically the momentum. You see the momentum indicator that we have in there? Well, you don't actually need it with the squeeze because it's actually showing that for you. And when the bars are light blue, then that means that the momentum is continuing to be bullish. So this is bullish momentum. So our direction is in that direction because the momentum is showing us that, the volume and the speed, the strength is still there. Now, once you get into a dark blue bar, the dark blue bars is letting you know that the momentum is slowing down. So you see a slowdown, it's starting to slow down. So that means that move is tapping out now. So you can actually stay into this move until it taps out. That's basically what it's showing you. So you can fire off and you can stay in that move until you start to see momentum, and getting exhausted. That's letting you know, okay, I need to get up out of here. The fun is over. All right. So then once we got into this move here with this squeeze move, once it fires short, you can see that we have some dark red bars. So that means that the bear trend is strong. Okay. It's firing off short, and that bear trend, the momentum there is still strong. Now, once it gets yellow, that means that the sell-off is exhausting. It's getting into exhausting levels. And once it starts to, as you see the reversal right here, it's letting you know that the momentum is shifting. Okay. It's a real nice shift here. I'll let you know that, hey, you need to get up out of there, right? If you were short. Okay. So you go through these extremes of, the momentum being strong, and then it starts to get exhausted. And then from back here, you see that it was strong on the downside, and then it gets exhausted. So that's how you read the squeeze. And because it's a lower studies, it allows you to load up all those other nice indicators that we like on our price chart, because it's telling us all those things that the Bollinger Bands, the Keltner channels, the momentum, and all of that is telling us right here in one indicator, which is pretty cool. So that's my mentor, John Carter. That's his tool here, which is pretty awesome. But if you go into edit studies, we can now remove the Bollinger Bands and the Keltner channels and the momentum oscillator. And we could just put our moving averages back on here. Go to show study. And we're back in the game. So there you guys have it. That's the squeeze. And I hope you guys really enjoyed this lesson. See you in the next one. Peace.